Let us solve question number C 5.1.10. Good question, big question. A large profit making company is considering the installation of a machine to process the waste produced by one of its existing manufacturing process to be converted into marketable product. So right now what they are planning is they want to convert their waste into marketable product and they will be purchasing machine for the same. At present, the waste is removed by a contractor for a disposal on a payment by company of 150 lakhs per annum for next 4 years. So you are having a contract with a contractor that he will be removing your waste and he charges you 150 lakhs rupees per annum, and the contract is for next 4 years. The contract can be terminated. Now, if you will purchase the machine and convert your waste into marketable product, you will have to cancel the contract. The contract can be terminated upon installation of the aforesaid machine on the payment of compensation of 90 lakhs. So you will have to pay this 90 lakhs rupees to the contractor because you are cancelling the contract. Before the processing operation starts, means you will have to pay him at the end of 0 year. This compensation is not allowed as deduction for tax purpose. So for taxation, it will not even give you the tax benefit. The machine required for carrying out the processing cost will be 600 lakhs, that is 6 crore rupees, to be financed by a loan repayable in 4 equal annual installments commencing from the end of the 1 year. The interest rate is 14% per annum. At the end of 4th year, the machine can be sold for rupees 60 lakhs and the cost of dismantling and removing will be 45 lakhs. So you can get 60 lakhs rupees from the machine, but you will have to remove it, dismantle it, and it will cost you 45 lakhs. That means net in your hand, you will be getting only 15 lakhs. That is 60 minus 45. Sales and direct cost of the product emerging from the waste of the process for the 4 years are as under. So sales is given, material consumption, wages, other expense, factory overhead. Now what are the overheads is the total expenditure of the company, which is distributed to all the departments. Now normally understand in decision making, overhead are irrelevant cost, because whether you start this unit or not, your overall expenditure is going to remain same. It is head office expenditure which is just allocated to this product. So normally overhead expenditure should not be considered for the purpose of decision making. Even they have given us depreciation. Initial stock of materials required before commencement of the processing operation is 60 lakhs at the start of the year 1. The stock levels of the materials to be maintained at the end of the year 1, 2 and 3 will be 165 lakhs. And the stocks at the end of 4th year will be nil. The storage, now this is just working capital. And I will teach you how to deal it in capital budgeting question. The storage of the material will utilize the space which would have otherwise been rented out for 30 lakhs per annum. Opportunity cost. Good point. Labor cost includes wages of 40 workers whose transfer to this process will reduce the ideal time payment of rupees 45 lakhs in year 1 and 30 lakhs in year 2. What does this mean? This is a benefit for the company. This workers were ideal and now will be utilized in this project. Factory overhead includes apportionment of general factory overhead except to the extent of insurance charges of 90 lakhs. So this should be considered because this is related to this project. Otherwise, it contains only all other charges related to head office. So they are going to remain same irrespective whether you purchase this machinery or not. Payable on this venture. The company's tax rate is 30%. Present value factors are given. Advise the management on desirability of installing the machine for processing the waste. All calculations should form part of your answer. Now, if this question is asked in examination, it is ultimately an RTP question. But if the question is asked in examination, then it will be a very long question. As far as I am concerned, I am doing it in Excel sheet. So it will become not so much lengthy for me because I can just calculate all the things by formula. So let me draw the columns. Year column, 0, 1, 0, 1, 2, 3, and 4. There are 4 years. Is it all? 4 years. So let me first find out the profit from the project. Then I'll convert it into cash flow. For finding out profit, first I'll have to write down sales. So first column is sales. 966, 966. One two five four, 1254. No, it will not be like this. This will be 0. It is at the end of 0 year, right? This will be 966. This will be 966. This will be 1254. This will be 1254. This will be 0. That is just 0. I think they are writing. All right. So this is my sales. Material consumption is it is material consumption 90, 120, 90, 120, 255, 255. 90, 120, 255, 255. Then wages 225, wages 225, 225, 255, 300. Other expenses 120, 135, 162, 210. Factory overhead, as we have decided, we will be considering only 90 lakhs. So factory overhead, we will be considering 90 lakhs for all 4 years. Depreciation, $150, 114, 84, 63. This is 150. All right. Any other thing? Yes. This is working capital. The storage of material will utilize the space which would otherwise a opportunity cost of 30 lakhs per annum. So opportunity cost, it is 30 lakhs per annum. So every year it is 30 lakhs. Next is was ideal time wages which are saved. Yes, over here 45 lakhs in year 1 and 30 lakhs in year 2. This is your benefit. 45 lakhs in year 1, 30 lakhs in year 2. This is benefit due to ideal time. And how much is the benefit? 45 and 30. So if I want to consider it as a cost, it is minus 45 minus 30. 45 in year 1, 30 in year 2. Yes. I will also have to consider interest cost. Yes. There is a loan by which I am paying all this, right? So I will have to consider interest cost. INT. What will be interest cost? Try to concentrate. You are purchasing 600 lakhs machine in 4 equal annual installment. So 600 lakhs machine, 4 equal annual installment divided by 4. So 150 lakhs rupees you are paying every year. So first year you will be using the money. How many lakhs? 600 lakhs. Second year you have already paid 150. So you will be using only 450 lakhs. Third year you will be using 300 lakhs, and fourth year you will be using 150. What is your rate of interest? 14%. So this will be interest. Sir, principal repayment is not your expenditure. So I am right now not considering it while finding out profit, but it is my cash outflow. So for considering cash outflow, I will be considering it. Is it all right? So this is 600 into 14, 84. 450 into 14, 63. 300 into 14, 42, and 150 into 14 is 21. This is the interest which I'll be paying for all 4 years. First year 84. Second 63. Third 42. This will be 21. So this is 4 years interest. So we have considered depreciation, interest, and every other cost. I can't find out profit before tax. So profit before tax. What I'll be using is the formula for finding out profit before tax is equal to, I will be taking sales figure minus all cost. As benefit I have taken negative, so I'll be doing minus only. And this is my answer. This will be profit before tax. I can directly find out profit after tax. Let me just move it to somewhat. Profit before tax. Profit after tax is 1 minus t. So profit before tax into 1 minus t, I'll be getting profit after tax. Profit after tax will be is equal to this multiplied by 0.70. So this will be profit after tax. Now if I want to find out cash flow from this operations or cash flow from this operating activity, I will have to find out cash flows, and that cash flows will be is equal to profit after tax plus depreciation. So these are my cash flows. It will be is equal to profit after tax plus depreciation It will be profit after tax after depreciation. So this is my operating cash flows from my answers. Now I need to consider, first I am considering working capital. So those are cash flows, so it is coming positive figure. Now if it is a positive figure, I'll be writing positive cash flow. If it is a negative figure, I'll be writing negative cash flows. So I'll be dealing with cash flows now. The machine requires for carrying out the processing. Let me start with first paragraph. The waste is removed by the contractor for disposal on payment by the company of 150 lakhs per annum. Now it will be saved. If you purchase this machinery, 150 lakhs per annum will be saved. So if you save 150 lakhs per annum, which is your cost, after tax, you will be saving 150 into 0.7. That is only 105 lakhs per annum. Why? When you are paying 150 lakhs, you are getting tax benefit of 45. Now you will not be paying 150 lakhs, you will not be even getting tax benefit of 45. So what you are actually saving is 105 lakhs every year. 105 lakhs savings after tax is cash inflow. So 105 lakhs cash inflow from savings. It is 105, 105, 105, 10. Every year I will be saving 1 lakh. 1 lakh, 105 lakhs. I will have to pay my installment. How much installment I am paying every year is 150. So minus 150. Minus 150 minus 150 minus 150. It is minus 150. So for each year I am paying installment of 150 lakhs. The contract can be terminated upon the installation of the aforesaid machine on the payment of compensation of 90 lakhs. So I'll have to pay 90 lakhs at the end of 0 year. Compensation minus 90. And this I need to pay today. So if I need to pay today, I will have to write down at the end of 0 year. Before processing, this compensation is not allowed as deduction. We have done even 4 equal annual installment of 150. Interest we have considered while finding out profit. At the end of 4th year, the machine can be sold at 60 lakhs and cost of dismantling is 45 lakhs. So what will be net? 60 minus 45, I will be getting 15 lakhs. I am ignoring capital gain tax or capital gain tax benefit on this particular amount. So 15 lakhs rupees will be my cash inflow at the end of 4th year. It is the sale of machinery, MS, machinery sale, and it is 15 lakhs. And it is positive 15, I will be getting cash inflow of 15 rupees. Sales and direct cost we have considered. Initial stock of the material required before commencement of operations is 60 lakhs. So I will need a raw material of 60 lakhs today at the end of 0 year. Working capital is cash outflow always at the end of 0 year. So at the end of 0 year, this is working capital and it will be minus 60. So working capital is minus 60. The stock level of material to be maintained at 1, 2 and 3 years is 165. Say in 0 year you have only purchased 60, but in 1st year onwards you require 165. So you will have to invest more 105 rupees at the end of 1st year to make it 60 plus 105 is equal to 165. So I will be investing more in working capital. How much? Minus 105. This is investment in working capital. This I have written it in sales column. This was sales, right? So this is working capital minus 60 minus 105. So up till at the end of first year, you have invested totally 165, which was required, and the stock at the end of the fourth year will be nil. What does it mean? Working capital is cash outflow at the end of 0 year. In this case, at the end of 0 year, at the end of first year, and it will become cash inflow when you close your business. When you are closing your business at the end of fourth year, ultimately it will be cash inflow and total amount will be recovered. This is plus 165. Alright, so this is the working capital. Working capital normally is given 60 lakhs. What we do? Negative at the end of 0 year, positive at the end of fourth year. Here there is an additional point whereby you need to increase the working capital at the end of first year. Sir, in second year and third year, you have reached up till 165. Now it will rotate itself. Alright, so no need to invest more. The storage of the material will utilize the space. This 30 lakhs I have considered in profit. 45 lakhs, 30 lakhs I have considered in profit. Factory overhead 90 lakhs I have included in profit. Company's tax rate I have considered wherever necessary. So I think I am done with all my cash flows. So what will be my cash flows? Starting from, it will be is equal to cash flow of this column plus 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 this column. So these are my cash inflows and cash outflows at different point of time as far as my machinery is concerned. I just need to find out NPV of this project, that is present value of cash inflow minus present value of cash outflow. Now as I am in Excel, I can directly find out my NPV. NPV will be is equal to NPV, and rate will be, rate given in the question is present value factor at the rate of 14%. So it will be 14% of all these figures. I will be directly getting NPV. In Excel, you can directly find out NPV. In book, you will have to find out present value of cash inflow minus present value of cash outflow. NPV will have to find it out again because this 150 is at the end of 0 year, right? It would have taken at the end of first year. So what I will be doing, I will be finding out present value of cash inflow. Present value of cash inflow by just doing NPV at 14% rate of interest of all these 4 cells. This is my present value of cash inflow. Present value of cash outflow, we are already knowing at the end of 0 year is 150, and so my NPV will be this minus this figure will give me 577.80. This is my net present value. Excellent question what we have done. For a machine which is going to process our waste and make it a marketable product, first I find out the profitability, means profit after tax. I added back the depreciation and I got cash flow from normal operations. Then I dealt with working capital, which was also good because in first year you are investing 60 and in next year you are investing 105. Everything will be recovered at the end of the period. There was a good point of loan, there was good point of opportunity cost, ideal time saved. So there was opportunity cost also, there was opportunity gain also. Working capital was a good point. Yes, as far as your manual calculation is concerned, it might take some more time as far as this question is concerned.